You are listening to Mining Stock Education.
Welcome to Mining Stock Education. My name is Brian Lenny. Today with me, I have Lisa Davis, CEO of PearTree Financial. In today's conversation, you will hear Lisa's views on the current state of financing in the resource sector, what commodities are attracting the most attention, the misconceptions of flow-through financings, how charitable financings work, and how financing might or should change in the future. Lisa, it's great to have you. I think it's prudent if we start with an introduction to yourself and to PearTree Financial.
Thanks, Brian. I'm really glad to be here and to be able to tell you a little bit more about PearTree. PearTree has been around since 2007 and was one of the original players in this little niche space, which is structured flow-through financing, mainly charity flow-through financing, which is where we got our start and where I think our heart still belongs. So we're able to both provide much needed capital for exploration and development stage projects in Canada. But at the same time, we're seeing a lot of money go into really important causes in a lot of communities across the country. So while we actually started off really focused on the philanthropy side of what we do, we've become the largest single provider of capital for Canadian projects at the exploration stage. So we're really proud of that history, and 16, 17 years later, this has really become a mainstay for junior companies.
That's great. Last week, you attended and spoke at the Mining Investment Conference of the North in Quebec City. Conferences can be a great gauge of sentiment in the sector, and especially, I think, from the financing perspective. As such, what were your takeaways from the conference, and would you say that there's money ready to be deployed in the sector?
Yeah, I mean, look, I think the year started off as probably in a lot of sectors in a bit of an unusual way, a lot of, uncertainty due to what's going on south of the border. Um, But I do think that there's a fair bit of positive sentiment because the newly elected Liberal government in Canada has really said, and I think they're already, showing some action in terms of standing squarely behind the resource sector and understanding the importance of resources generally, but also critical minerals and strategic minerals for defense purposes. So, all of that, both both federally and provincially, in a lot of cases, is very encouraging as we move forward. And there have been also a number of developments that could be really important in terms of the scope of expenses that can be funded by flow-through shares, which I'm pretty excited about. The end of the story isn't written, but I think because of those things, we're seeing things loosen up a little bit. And of course, on the precious metal side, the price of gold is quite helpful. It's obviously more helpful if you're a producer, and it's just falling to the bottom line. But I think we're starting to see more interest in some of the exploration plays now that the price has stayed healthy for quite some time.
Right, right. And so those changes that you were talking about, or that support from the government, that is solely focused on how flow through money can be used, or is there money that's going to become available? Is that what you mean by support?
Well, I mean, there are some government programs that are adding support. I mean, the Quebec government came out with their budget just a couple of weeks ago, and it sort of has pluses and minuses. It actually took away some of the benefits that were extra benefits for Quebec resident flow-through share subscribers. However, again, focusing more on critical minerals, it increased the refundable tax credits for the corporation if they're exploring for their one of their list of critical or strategic minerals, and that's been increased to 45% of the expenditures on exploration. And also, they've extended the credit to um, apply to development work. So you can spend up to $100 million over 5 years and on the Quebec side, get a 45% credit if you're targeting critical and strategic minerals. So that's that's one thing. But the other thing is the Liberal platform federally has indicated a couple of things. They want to expand the list of critical minerals that are eligible for the critical minerals exploration tax credit of 30%. Right now, NRCan's, I think, put out a list of, I think it's 34, but CRA, when they created the CMETC, applied it only to 15 of those. And so that we don't know exactly what, but again, defense applications seem to be something that is sort of top of mind right now. So it looks like that list may expand, so that expands the group that's eligible for the 30% tax credit. The other thing they've said, and this has been a real gap for funding in the sector generally, is you get people excited and you have the additional tax benefits available at the grassroots exploration stage. And, the old sort of Lassonde curve picture, you get to a certain point and then you get into that work that's quite
Yeah.
expensive, but not like you're not at the construction. You may not even have made a construction decision, but you're doing a lot of technical studies, feasibility studies, engineering work, and it's really hard to find funding. And the CRA's interpretation of the rules has been very conservative as far as what is being done for an exploration purpose, and that is the group of expenditures that's eligible for flow through treatment and extra credits from the government. So the Liberal platform included something saying that, technical studies, engineering work, feasibility studies, all those expenses that are so hard to fund would be clearly included in the group of Canadian exploration expenditures. So we haven't seen proposed legislation yet, but it was in writing in the Liberal platform. So fingers crossed that that's going to happen. Uh, so those are some of the big ones.
Those are huge, actually. Like that really separates Canada if you can start using those for development. That's a big difference. In terms of, I guess, maybe it's subjective to a point, but comparing, let's say, this year to last year at the same time, and I don't know if you went to that conference previous or what, but do you see that we're headed towards a better market in terms of availability of funds or interest in these, like outside of the government stuff, but just the market itself? Do you see more interest in participating in flow through financings and such?
I think I'm seeing the interest start to, creep up in the right direction again. I would probably say a year, maybe a little bit more than a year ago, things were better. Now some of that has to do with very particular things. Like for instance, lithium, I think, made a huge difference when the price of lithium was soaring a couple of years ago. Um, Also, one of the things that we've done that I'm really proud of is that we've introduced flow through share financing to the Australian market, and we've had a lot of issuers that are listed only on the Australian Securities Exchange, but started to become more interested in Canadian projects, do their financings through us. Is a little tricky technically, but we've sorted through all that. And so um, us, there's a lot of Australian-based companies and Australian money coming into Canada, which is actually finding its way in through structured flow-through share offerings, where the shares are eventually being resold on the ASX. So I, I mention that after mentioning lithium because for a while, a couple of years ago, we saw a lot of Australian interest in Canadian lithium projects, probably most of which were in Quebec. And then, of course, the price, really became a lot less interesting to those people. I mean, there's still some great projects that are, in the works, and they're I'm sure we'll see. the way things are cyclical in this business. We'll see things come back,
Right.
um, but I like if I go back a year or so ago, I think we were still riding sort of the end of that wave, which made like our business just go nuts for a couple of years. So I think things are looking more optimistic, but um, if I compare kind of a year and a half ago to, just recently, probably the fundamental investor interest, that sort of the end buying in our structured program. And I don't know if you need me to kind of go back to the basics and explain a little bit about how that works, but I think it's coming back. But you know, a year and a half ago or so, things were a little more robust.
Why don't we talk about that? Because I think that is something that a lot of people don't understand how the charitable financings work. I think most people realize that a charitable flow through financing occurs at a higher premium to whatever that share price is, which is fantastic. There seems to be a difference between each province and territory sort of having their own uh, limit that they can go to in terms of that premium on the share price. And then you brought up the back end buyer, how the back end buyer works, and maybe even how you find back end buyers, whether they're coming to you or vice versa.
Sure. So, look, the structure is pretty simple, particularly, when I talk to an issuer, it doesn't add all kinds of complications for the issuer to the extent there's other sort of moving parts. We take care of it, in our back office. But it's really, rather than, just an issuer selling shares to a retail Canadian investor, which is kind of the market prior to these types of financings being created. So rather than that A to B, it becomes A to B to C. So issuer issues shares to a subscriber, which can take advantage of the tax benefits associated with the flow-through shares. The flow-through shares are then through us immediately donated on behalf of our clients to charities of their choosing, which are any registered Canadian charity. And we have to have arranged for the immediate liquidity by the charity, since they're, not interested in holding often somewhat illiquid junior mining stocks. So we've pre-arranged an exit for the charity to the so-called end buyer. So it's issuer to donor, donation to charity, and immediate resale by charity to the end buyer. Um, what this does, and I'll get into sort of the economic side, but in terms of expanding the potential scope of or class of buyers for shares in these companies, in the traditional sense, or the old traditional way, a flow-through share goes to a Canadian who can take advantage of the tax benefits, and pretty much, maybe a somewhat high net worth, but kind of a retail market, and that was the market for flow-through shares. By structuring the transactions this way, that end buyer does not have to be in Canada, doesn't have to be an individual, doesn't have to be, there's hardly any restrictions on who that buyer can be, other than being sort of like in the category of like accredited investor.
Right.
And that means that, strategic investors from anywhere in the world, different institutions that may not have, been eligible to participate in a flow-through share offering, are there. So it's really opened up the class of investors. So that's important. And then the other thing from the point of view of the pricing is that there's sort of a tax arbitrage that's built in that allows us to offer a healthy premium for the flow-through shares to the issuer. And in order to achieve what our donor clients are looking for as far as like an after-tax cost of their donation, there's room for us to sell the shares that the charities receive to the end buyers at a discount.
Yeah.
So we call, that difference between the issue price and the end buyer purchase price, the delta. And that delta changes depending on what additional credits are available federally. So grassroots exploration attracts a 15% mineral exploration tax credit, but if your primary target is on that critical minerals list, there's a 30% tax credit. And then provincially, if for instance, Saskatchewan is very generous. There's a 30% provincial tax credit for all exploration in Saskatchewan. Other provinces like BC and Manitoba actually offer some pretty generous credits, but they haven't upped the amount of the credit for critical minerals. So you do have to go province by province to sort of calculate the province by province and type of mineral that you're looking for, because the critical versus other is relevant. So you've got to sort of see how that all fits together. So typically what you would see is um, if your shares are trading at $1, you could, you know, I would say on average, let's say your that delta would be something like 1 point between 1.4 and 1.7 probably. So if we take 1.5, easy numbers, your shares are trading at $1, we might be able to issue them at $1.35, and then your end buyer could purchase them at 80, I have to do the math, but let's say 88 cents or something in around there. Or, the easiest way of looking at it is what I issue for $1.50, I can sell for $1. So you've got the $1.50 in your treasury, but particularly, in a negotiation with a strategic investor where there's a valuation gap and it's important to have that investor involved in your project, we can bridge that gap and help make things happen.
Excellent. And so that back end buyer, those shares that they buy, are they subject to the 4-month hold?
They will be if it's a private placement. Again, it's we see some prospectus offerings and flow through shares by more mature issuers. Also, the life offering exemption, if you're familiar with that,
Yeah.
which is it's an exemption, but there's no hold period,
Right.
and the maximum amounts on that offering have just been increased. So, you can do a $10 million deal using the life offering, and there's no hold period. And then then you get into things like interjurisdictionally, like I was saying, with everything that we do in Australia. I mean, our hold periods don't apply outside of the country. So if you can resell outside of Canada, then as long as they're not going to flow back into a Canadian market, which isn't an issue if the ASX is where the shares are trading,
Right.
there wouldn't be a hold period there. So yes, the hold period does apply when it's there, but the rules do allow for some sort of maneuvering in terms of what exemptions you're under and where you're reselling.
Right. I was wondering if you had a view on what's happening with American investors. The States represents, obviously the biggest financial market that Canadians could access. From my American friends who are investors, many of them have gotten dropped by their brokers, or have had to, find another way to invest in Canadian stocks. And the big thing, not only are they been dropped for whatever reason, but also if you look at the legend that's attached to an American's um, private placement financing, it really is on the downside for them to
Hmm.
participate in financings. Do you have a view on that, and why? Is it the Canadian market, or is it the SEC that that puts such stringent requirements on it? And why aren't we accessing more American dollars?
Yeah, I mean, we have encountered issues with the US legending requirements. So, um, that I think when I've seen that come up, it's been on the interlisted companies. And like when you look at the companies that are at sort of grassroots exploration stage, not that there aren't more senior companies that are, trying to expand their resource doing exploration, but uh, you know, by and large, the companies that we're dealing with would tend not to have a US listing. And so it's a lot less complicated. I mean, there's not really a market in the US, so they've got to, you know, come back and resell through a Canadian market. When in the few occasions where we have an interlisted company, it does become a bit of an impediment sometimes. Those legending requirements are negotiable. I'm not sure that a lot of people know that, like in
Yeah.
terms of what it takes to remove the legend. I think sometimes the sort of standard legends require like an opinion of U.S. counsel and that kind of thing, and it does become very, expensive and like kind of lengthy if you're trying
Yes.
to exit a position quickly. Um, and it also depends too. I mean, it sounds like what you're talking about are maybe kind of more if they're individual or high net worth buyers as opposed to a qualified institutional buyer in the US. They're subject to somewhat different rules. They're considered to be, big boys that can take care of themselves, and
Yeah.
as long as they, make the right undertakings as far as complying with US resale requirements, it's a lot easier for them. But yeah, I've seen it. I've seen that problem with the legends, but generally the more junior companies that aren't interlisted don't seem to be, um, that doesn't seem to be a problem.
Okay. What do you think are some of the biggest misconceptions about flow through financings, charitable or regular flow through?
Um, I think, I think there's a bit of a holdover from the days when all of these deals were done in that traditional way, and I think some of those traditional funds, which many of which either don't exist or just doing a lot less than they used to, um, were not necessarily considered like the best shareholders to have on your register. A lot of I think the view was often as soon as the 4-month hold period expires on some of those shares that they're ready to sort of, you know, cut and run.
Hmm.
As a traditional flow through fund, you report your performance on an after tax basis. So you can easily sell at, a pretty significant loss and still show after tax that you've made a profit. So, like the incentive to manage those funds a little bit better and to take the long-term view isn't there. The other problem with the structure of those funds is that they roll over into a mutual fund usually after about 18 months. So once that rollover happens, if you think that your typical subscriber for units in a flow through fund really is there for the tax benefits, there's a lot of redemptions as soon as the
Hmm.
rollover happens. And so the fund managers have no choice but to sell a lot of their positions to fund the redemption. So the whole traditional structure doesn't really lend itself to the kind of investor that you want that's got that longer term view, especially in this business. And think I think that concern has probably been one of the biggest concerns about flow through. The thing about the structured flow through shares, and it does depend on who you're dealing with and if there's transparency in what you're doing, but it really does allow you to bring in a buyer as an end buyer who you're sort of courting and want to see as a partner in what you're doing. And like as I said earlier, you might have had a valuation gap, but by structuring the deal the way we can, you can overcome that. So it's like a mechanism to attract the shareholders you want rather than a sort of a, it's, you can't live with them, you can't live without them. You need the money from the fund, but at the end of a certain period of time, that may put some downward pressure on your stock. So
Right.
I think that's been the like the biggest concern when it comes to flow through shares.
Right. And so, as that sort of middleman in these deals, are you able to advise companies on which funds, or is it relatively known which ones are the ones that are sticky and which ones are gonna, sell at the once the 4 month is up?
Yeah, and look, the end buyers sort of come from, I'd say, three main sources. Sometimes we have relationships with issuers where they have already identified, let's say, a strategic investor or other, existing shareholders that are interested in investing in the company, and they just know that if they come to us and we structure it the way we do, there'll be less dilution and it's a better deal. So that's one way. We work very often with other broker dealers that are underwriting a share offering, and similarly, like they've got, they have an institutional sales desk. They're bringing the book. They just come to us because without us assembling the other pieces, they can't structure things this way and bring in those buyers at a price that, will allow them to fill their book. So that's the second way. And then the third way is, we have over time, obviously, um, uh, you know, uh, nurtured relationships with people that have participated as end buyers in these transactions. So someone may come to us and, it's not really the focus of our business, but we're happy to make introductions and let people see if there's interest with buyers that we may know. That's not something that we monetize. It's not really part of our business, but and and I think, listen, there's not that many funds or other types of purchasers for investments in the earliest stage of mining, and I think, we there's a few hedge funds, and then, we know the ones that have a more um, long-term view and are purchasing more, based on fundamentals and have like a bit of a runway. So so I think we know there aren't that many of them, and like I said, we're happy to make those introductions when we can.
Right. What do you think of warrants? It's quite a big topic in the resource sector on both on the issuer side and from the investor's point of view. A lot of people, want the warrant, they want the benefit of the warrant, but then are unhappy when the warrant overhang impacts the share
Yeah.
price moving forward. So, what's your view on warrants?
I can sort of see both sides. Listen, it's nice to have the income stream if things go well and, they're exercised. Often, of course, you've got like that acceleration clause so that the overhang isn't too bad. That may be like a good middle ground. So at least you can sort of force the exercise, get some, get some funding and get rid of that overhang. I I think like I don't have a really strong view. Like the role we play, we don't tend to get very involved in whether or not a unit deal is done versus a share deal. It's sort of more
Right.
the traditional brokerage. But I do think um, I think by putting in an acceleration clause like that, you can at least help with the overhang, like limit it. And like I said, if you've got if the warrants are in the money and you have another source of funding when it's not that easy to find. Um, there's a positive side to it.
Right. Well, what would be your gauge on the appeal of a financing? Let's say in the future that they got rid of warrants. Would the money be as easy to find as it is today? Like, would there be that much of a difference between the appeal?
I think where the difference often is in the broker warrants.
Okay.
I think I you know I think some of these deals are, they're tough slogging, and in order to sort of get someone to work hard for you, like that's the upside for the broker.
Right.
Um, so I think, especially again when you're looking at the most junior deals where you're not dealing with BMO or Scotia or something like that, that that incentive for the broker can be quite important.
Right. Right. In terms of the financing, whether it's flow through or charitable, across the gambit, where do you think, like, if you could make one change or a couple changes to the whole financing portion of the sector, what would it be?
Um, I'll tell you, I'd make two comments. One is sort of being focused like specifically on the flow through sector. I think this uh, proposed change that's in the Liberal platform to allow flow-through financing to clearly, without fear of audit and repercussions from CRA, cover, expenses for things like feasibility studies and other sort of technical studies that are, helping to determine the economic viability of a mine and whether to proceed to the next stage, like that kind of real orphaned period is something that would be important to fill in. I mean, otherwise, and I think we're seeing some of it now is, I think the mining industry has been plagued with this poor reputation when it comes to generalist investing, and I'm hopeful that with a lot being put towards explaining the importance of critical minerals and strategic minerals, and how any, say, young person, any person with their cell phone or whatever, like it needs to start to understand that if it's not grown, it's mined, and it's true, and there's so many things, no matter sort of where you are, like on the political spectrum, that if we're going to achieve goals about a greener economy, and so many of these things now, like on increased defense spending, all of these critical minerals are like so important, and sort of maybe expanding that scope and bringing more of the generalist investor back to the table and creating a more sort of robust retail market, I think, is something that could help.
Right. What about getting rid of the accreditation needed for investors to participate in a financing? Do you think that's something that would work or should be pursued?
You know, listen, there's a fine line that you tread between investor protection and, having a sort of robust capital markets. I think that securities commissions in Canada have been like looking pretty hard at some of these things that could expand things at sort of the early stages where small amounts of capital are coming in. I mean, there's been talk about like, why is accreditation based on earning a certain amount? I mean, you can earn a lot of money and not necessarily be a smart investor in a certain space. If you're investing in junior mining stocks and you're a geologist, you make less money than someone who's accredited. I mean, does that make sense, right?
Right.
They're things like the life um, offering exemption and stuff like that. Like they're chipping away at it. So I think that good. I mean, the amount of capital that's needed to advance an exploration or development project is so huge that while I think a vibrant retail market in the early days is important, like partly just to be able to get, get stories out and get stories like recognized, not just news that, falls flat and doesn't make a difference in the marketplace. It's got, it's got an important place to an important place in sort of the whole ecosystem, but really the capital that's required is so significant that it's the more, it's the private equity players and other, strategic investors and those types of investors that are going to move the dial.
Right. How or where should interested investors get in touch with yourself or PearTree Financial?
Easiest thing is to just go on to our website, PearTreeCanada.com. We've got sort of two, we've got like PearTree Philanthropic and PearTree on the mining side, so you should be able to easily navigate to where you want to go. I would recommend to anybody, if sort of as a primer on this, if you do go onto our website, I think it's pretty easy to find videos in quite a few different languages because we recognize certainly that some of our end buyers are, in Germany or in, other countries. So in multiple languages, you can find a short video of 3 or 4 minutes that does a really good job of just explaining the structure and the basics that you need to know. And our team's information is up on our website. So happy to get a call or an email from anybody that's got questions.
Excellent. Lisa, thank you so much for your time today, and hopefully we can do it again soon.
All right, thank you very much.